This is the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. If you're interested in the intersection of real estate, blockchain technology, AI, and more, you've come to the right place. Don't miss your opportunity to attend the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. Enjoy the show.
All right, ladies and gentlemen, welcome to another Chicago Blockchain Real Estate Collective Meetup. I'm your host, Adam Carswell, joined as always by my co-host, Michael Flight, CEO of LibertyFund.io. Michael, any updates on your end? How's everything going at Liberty?
Things are going fantastic with Liberty. We are just about set up. We're doing a final run through with Securitize. That's this week. We should have everything done with our fund administrator, Stonegate, by the end of the week. And we expect to actually go live and start accepting money the second week in May. So it's been a long time coming. A lot of legal twists and turns, accounting twists and turns, and a lot of the technology does that, but that's not legal. But anyways, we are very excited to be launching, and we think it's going to be great. And as part of the launching, we have been evaluating blockchains. And so, initially when I started this, this was back a long time ago. I thought that all blockchains were, I thought that Bitcoin was just one big blockchain. So that there was no difference between Bitcoin, in blockchain. And then, through working through all this stuff, it's like, well, no, there's many different blockchains. And I look at Bitcoin as more of a currency or a store of value. And I look at some other blockchains as more of software projects. And then there's blockchains like Algorand, which I consider more of a network, because most people don't understand what the blockchains do. So I'm trying to dumb it down for both me and them. And then we'll have the expert, Barry, come in and explain that. But so I look at, your issuance blockchain is, the rails on what your token is going to be running on. And so we had to bring ourselves up to speed as to, there's differences between these blockchains. There's fees associated with the blockchains. There's security issues with some of the blockchains. There's also, speed at which they run and at which they do transactions. And I don't know if real estate's going to be as concerned about transaction speed, but we certainly are concerned about security and, where our stuff is going to go. So with that, I will let you give a little bit about Barry's background, but I can't tell you how excited we are to have Barry here. He is a longtime Wall Street veteran, and so he not only understands the blockchain space, but also the financial world inside and out.
Yeah, really looking forward to Barry's presentation today. Before that, real quick, just want to say thank you to our team, Courtney, Timmy, Jordan, Sharav, Sam, Aaron, Jason, all you guys. Thank you so much for the hard work you put in to make this meetup happen. We also have to give a big thank you to Algorand's marketing department as well for making tonight happen. And if you're with us here live, hello, and thank you for joining us and investing your time with us. We are going to add a ton of value to your life tonight. If you're joining us on the replay, same goes for you there. And be sure to like and subscribe as well. Please, pretty please. It really helps a lot with the overall visibility of the group, as well as helps us bring on more high profile guests, just like Mr. Finkelstein. If you're with us on Facebook, we are going to drop a link in the comments so you can come join us here in the main Zoom room if you so choose. And speaking of comments, let's go ahead and get that chat box warmed up as well. Punch in your name, where you're tuned in from. And here we go. It's time for Barry's grand presentation. What blockchain should you use for real estate tokenization? Michael, you shared a little bit about his background there, the Wall Street side, very compelling. I had something here in the bio about more than $1.2 billion in deals. So Barry's done it all. Algorand is the company to learn about right now. So Barry, if you could kind of just share us your story a little bit as well. And let's go ahead and dive into the presentation.
Well, thanks, guys. Can you hear me first? Let me just make sure that I'm on appropriately.
Coming through. And by the way, I almost forgot, ladies and gentlemen, be sure to get those questions ready as well, because we are going to have a Q&A session with Barry once he's done presenting. But yeah, we can hear you, and please take it away.
All right, great. Well, thanks, guys. I appreciate the invite, the opportunity to speak to the group here. And I need to sort of level set a little bit. First and foremost is that, boy, that's an interesting picture that just popped up on my screen there of your avatar. I wasn't expecting that.
Oh,
Adam. I have to
that's
say.
coming up on mine.
So what you're getting in me tonight is the non-technological side of Algorand. I was just kidding with the guys before we got on that I'm using words and terms and things that I never thought I would ever be privy to after my 30 plus years of working on the street, 18 at Merrill Lynch and 12 at UBS before going off to do some of my own things. But sitting around the first tee box, using words that like DDoS and smart contracts and the like were not things that I ever thought I'd be part of, but I can use them and I can use them reasonably well. So I can answer a lot of the technological questions, but I reserve the right to say, I'll get back to you on that if it's something that dives in too deep. But what you do get is somebody who has done a lot over his years in the high finance world. And in many cases that crosses over into the real estate sector, into the asset-backed world, into the securitization world, all things which I'm sure folks on this call or who will listen into the call will have some level of familiarity with. Again, just a little bit of the background. I've run a number of different, or ran a number of different global trading desks, distribution desks, and structuring efforts in my 30 years. Most of it was dedicated to structured products. I was sort of the guy who, always took a pencil and turned it into a pen without anybody understanding how that happened, but it seemed to work for both sides. And so that was a good thing. And so I ended up getting to blockchain by sort of maybe just, it was in my DNA that it was new, it was interesting, it was theoretically disruptive, and it spoke to all the different things that I'd done my entire life and career. I have to correct one thing you said, Adam, which was something about 1.2 billion in transactions. That might have represented a month or so of my given life. I had the luxury of being involved in a lot of stuff for a long time. And boy, I think if I was to have to put it down on a piece of paper, that number would probably exceed north of $100 billion of transactions, I would guess, in actuality, and all the different stuffs that I involved myself in by hook or by crook. And I don't say it to pat myself on the back. I say it more to just let the crowd know that I've seen a lot of stuff over 30 years, and blockchain's a really unique technology that I am now fully immersed in. And like a lot of people, I started off with it very much as a naysayer. When it was brought to my attention, I went down the road of talk to me later when it's got some real gripping power to it. Other than that, I don't want to hear about it. And like a lot of people, I equated blockchain with cryptocurrency. And as I start almost all of these conversations, cryptocurrency is not the blockchain, and the blockchain is not cryptocurrency. Cryptocurrency is very much an important element of blockchain in that it's an application that runs on a blockchain. As Michael rightly pointed out, Bitcoin is a blockchain and Bitcoin is a cryptocurrency that most people associate with blockchain. And Algorand, the company that I'll talk about a bit, has our own cryptocurrency called the ALGO, but we are a technology company. You can think of Algorand a bit like you might think of iOS is for Apple or Android is for Samsung, or maybe even better as AWS is, that being Amazon Web Services, which you don't even know it, but when you're watching your Netflix, it's all running on Amazon Web Services, but you don't care and you don't know. You're just very happy to flip on your TV and boom, up comes whatever show it was you were looking to do, having no idea that Amazon Web Services is there. That's what we are as well. We want to be in the background. We're just a technology company. So that's a little bit about me. I promise I'll give a lot more background about Algorand, but what I wanted to first do is kind of give a little bit of my thoughts around real estate. And I fully admit to the fact that of the entire group on this phone, you all are probably far more versed in real estate overall than I am. But I am a homeowner. I have bought and sold different pieces of real estate over my life, and I am invested in a number of different funds that have exposure to real estate. So I have a working man's understanding of what real estate is. And by the way, when you're a Jewish guy living in New York, by definition, you invariably know a lot about real estate because every one of your third friends is in the real estate business. They're either a broker, their family either builds it, their family either leases it, or their family, does something with it. So I'm pretty familiar with a lot of it from that perspective.
This
So let's
guy's
talk
a real mensch. You got to meet him.
yeah, it's pretty much how it goes, Michael. You're right. It used to be, if I got a doctor for you. Well, now it's, if I got a family for you to meet, what about their son? Who cares? It's a good family. So let me talk first about the good, right? When you think about real estate, what's really good about real estate besides the fact that it puts either four walls around you or a roof over your head or a place to keep your business intact? The reality is it's a time-proven asset. And I'm not telling anyone on this call something that they don't know, but it's a really important factor. There's many assets that come and go. They have highs, they have lows, and their highs never remake where their lows brought them to. That's a unique attribute of real estate in that it has historically shown itself to have positive returns in virtually any cycle. Yes, there's a period of downtime, but it almost always has rebounded way to the excess of where it had made previous highs. And that's really unique as an asset class. And so you effectively can think of it as its own store of wealth. And what's really interesting about real estate is that it's unique in that it's very much a physical asset, real estate, but it's given to an entire derivatives world of cottage products, financial products, and industries that have all been able to grow because of the very existence of that hard asset, that building, that home, that apartment, as a case may be. And yet all these things now have spurs that come off of it in the lending businesses and the borrowing businesses and the securitization businesses and the like. And all these things are what we start to talk about when we start to think about how blockchain is starting to impact the real estate world, because all of these assets have the ability to show up on chain to effectively be tokenized, term we'll come back to in a moment, and to basically create a new asset for each of these assets. You may often hear the term security token, if you will, which is a fancy way of saying tokenizing a given asset. And we'll talk about that in a little bit. But for every good, there's the bad. And so when we think about real estate, then we have to think about some of the bads too. And what's the bad? Well, transactions, unfortunately, move at glacial speed, if anything. They're slow, they're complicated, they're cumbersome, they're very opaque. There's often levels of mistrust associated with what's happening in different real estate transactions. And of course, no one on this call would fall prey to any of that stuff, I realize, but there are nefarious characters in the industry, and there's a lot of contracts that get swung around and a lot of documentation that has to move. And with that comes a lot of possibilities for there to be bad behavior overall. It's also incredibly expensive, whether it's buying it, selling it, borrowing against it, all different levels of contracting in it. It's expensive, not the least of which is from point of interest to point of closing, whatever we're talking about, whether it's commercial or residential or anything in between, there is a tremendous amount of intermediaries that are involved in any given transaction. So it's expensive. There's a lot of mouths to feed because every one of the people that you ever mention or get on the other side of that phone are invariably going to have their hand in the till, whether it's the broker, whether it's the insurance company, whether it's the title company, whether it's the escrow agent, the bank itself, so many different touch points that ultimately require to be fed, if you will. And so what all that begets is a asset, which for all the good things that we talked about before is essentially, and I know this will be a bit, people will take it differently, it's effectively considered an illiquid asset. And we've created liquidity for parts of the asset class, but generally speaking, it would still sit in that bucket of illiquidity. as opposed to liquid. So what has blockchain been able to do then for the real estate sector in general? So let me sort of take some of these things one by one, and hopefully it'll start to make some sense. And then I'll talk specifically about Algorand and how it's helped to achieve some of these things. So I talked a bit about opaqueness before. Well, a blockchain is, by its very definition, an immutable record, an immutable ledger, if you will, that anything that's put on it is there forever, and it's for everyone and anyone to see. Again, I'm using the assumption that it's an open, permissionless blockchain like Algorand is. You can also have a private instance of Algorand, or there are other chains that run privately. But regardless if it's public or private, that which is put on the chain is there, it's immutable, and it's there for all and anyone to see. So this opaqueness that exists starts to diminish pretty quickly, and means things like criminal activity and compliance are much better looked after and kept intact with because of that. I also mentioned this idea of liquidity and access in general. So when you create a token, which again, we'll go into that a little bit more, you allow yourself to take this asset, which we talked about before being incredibly illiquid, and turning it into something that, assuming you have the ability to turn on a phone or turn on a computer to access it, because you can purchase the token that we're going to create. And the token is a representation of the ownership of whatever the asset is we're talking about. If it could be a building, it could be a contract, it could be a loan, as an example. But what it also allows us to do when we create tokens, it allows us to fractionalize them. And that's a huge thing when we think about real estate. So heretofore, yes, you could invest in a real estate fund that gives you exposure to a group of properties or even one property of which you're a partial owner of. But in most cases, and I don't want to say all cases, very difficult to take those ownership stakes and make them particularly small. But if you can tokenize a property, as an example, it's very simple to fractionalize that ownership. Now, this isn't unique to real estate. It's unique to any asset, and it's unique to blockchain in reality, is that you can fractionalize stuff. It may be the case that people have been reading the newspapers and heard a lot about NFTs, which is a non-fungible token, which is just a fancy way of saying token, to be honest with you. And non-fungible tokens really mean an autograph that's been stamped onto a given asset. But don't lose sight of the fact that it's just a token. But the fact that you can fractionalize that, just like you can fractionalize a Mickey Mantle baseball card, you can fractionalize the ownership interest in a building in Miami. And now you have the ability to take that token and you can make it into virtually any size. So the barrier to entry becomes much smaller, and you can open that up to a distribution network that goes pretty much as far as the eye can see, subject to different KYC and AML parameters that might exist, and to which there are folks who look after that as well. And that's a real situation. So there's companies like Asset Block, as an example, which you can all look up later, and I'll give you a way to get to that even on our own website to look at, which is exactly that. It's created a security token for different properties. They fractionalize them, and you can then buy accordingly. What Michael's been talking about from a fund perspective is precisely doing those types of transactions as well. And the reason why all this is possible is because of something that's called smart contract technology. And so within the world of blockchain, you've got these, and again, I don't want to get too deep in the weeds on the technology part of it, but blocks are created by transactions, essentially. Michael wants to send Barry $5. That's a transaction. It gets posted to the blockchain. It gets validated and approved, and it becomes a transaction. When a series of transactions is put together, then that forms a block, and the block gets added to the next spot of the chain, and the chain is literally created. Smart contracts allow for there to be if-then statements, essentially, that can occur, and allows for essentially almost any type of transaction to occur. By the way, Bitcoin doesn't do that, just FYI. Bitcoin is just an exchange of, you think of that as give me money, take money, give me money, take money. But not, I want that apple, but only if I have this type of money. That requires some type of a smart contract to occur. And that's what Ethereum actually first came to pass. So once smart contracts were built, that's what led to tokenization, which ultimately leads to the ability to have fractionalization. And once you've got this immutable ledger and these tokens that are there, you now have a way to say, this is an immutable piece of ownership. And once you have a reliable proof of ownership with a decentralized network, which you have in the blockchain, because what I don't need anymore is someone standing in the middle to validate that I've sold something to Michael or Michael's bought something from me, then I don't need all those middlemen that are in between. Because what blockchain has the ability to do, and I'll use a term you all are fairly familiar with, I'm sure, DVP, or delivery versus payment, then it's got what I will call the purest form of delivery versus payment in the form of atomic swaps. So this transaction will only occur if the other side of the transaction is standing there to happen, and they happen literally simultaneously and instantaneously, and assuming that you're running on an appropriate type of blockchain. And because of that, we don't need any body in between. I can literally exchange directly with Michael, and Michael will be exchanging directly with me, and we don't need anyone in between. Well, we've just eliminated lots of different people in that litany of folks that are typically there. I apologize if there's folks from the title world on the call, but I will tell you the way I actually first understood blockchain and its potential capability was because of getting clear title on my house. I refied my mortgage, had to pay for title insurance, protection, or clear title. I literally refinanced my house 2.5 months later because rates had dropped so much, and I had to do it again. And I was charged again, whatever it was, $3,000. And then I did it again 6 months. I had to do the same thing. That whole idea, when it was brought to my attention, what blockchain could achieve by making this immutable ledger that would effectively create perfect provenance for any ownership stake, made me understand what the potential power was for this type of immutable
Yeah, and I just want to interject, Barry, because
Please.
this is like the key thing that is like that I don't think enough people understand is that it's not only the instantaneous, it's 24/7, 365 days a year. There are no bank holidays, there's no Sundays. It's, it happens when it happens. So it's
that is accurate. Now, that does have a couple of problems with it too, Michael, when you start to get into those types of applications that are going to be more on what I'll call traditional financial assets. When you start tokenizing and digitalizing things like asset-backed securities or mortgage-backed securities or CMBS or second home equity agreement mortgages and that kind of thing. And that's because nobody knows exactly when you stop and take a mark-to-market. Is it at Sundays at 4:00 in Japan, or is it, there's never a close to a market. So that's a very interesting piece of the puzzle that has become rather important in this whole conversation around regulation. And regulation is another thing that becomes super important. As we sit here today, there's limited regulation in the world of blockchain. Now, some people think that's the greatest thing ever, that, more regulation, the worse for anything. I personally am a believer that regulation isn't a bad thing. It can actually be quite a good thing. The worst is to be operating in the gray, where you don't know what you can and can't do. And when that's that way, you tend to err on the side of extreme conservatism, because if you're wrong, it's a really bad thing. And if you're right, that's great, but you can't really afford that chance of having been wrong. But once you know the black and white, then you can figure out how to deal with that. I don't mean to say how to get around it, but you can certainly know what lane you can drive in appropriately. Regulation's coming, folks. Don't kid yourself. There will be regulation, and it will be significant, and it will ultimately be a good thing. It will mean that there will be not 2,000 different blockchains to choose from. There will probably be, I don't know, a handful, 5 to 15 different blockchains that will ultimately continue on. Hopefully Algorand will certainly be one of them. We are purposely built to be one of them. So I'm expecting that to be the case. And it's okay. We will not be the blockchain for everyone, for everything. There's plenty of room for there to be multiple blockchains. Think of it a bit, and it's one of the things we said in the cover to this meeting, it's a bit like, your cellular phone service, right? There's room for Verizon and T-Mobile and Sprint, and pick your other favorite, whatever your next favorite one is. Some of them have different attributes that others have. In the case of Algorand, it's purposely built to be extremely fast, extremely secure, extremely transactional, and extremely low cost, which is a perfect segue into how did that come to pass? And the way it came to pass was as such. So Silvio Micali's the founder of Algorand. He's a Turing Award winner, which is the Nobel Prize for computer science, effectively. And he is the creator of zero knowledge proofs, the cryptographic functionality that pretty much all blockchains at some level are built upon. He set out to disprove what people thought couldn't be done when Bitcoin and Ethereum first started, which, by the way, he thought were quite brilliant, just that they were flawed and that they weren't going as far as they could. It was always thought that you could never have decentralization, security, and scalability all at the same time. You had to give up one of those three elements, you can maintain the other two. He took his students at MIT, he came up with his theory around that, and they set out to prove it and run all sorts of wonderful models at MIT. And ultimately, when they did that, they came to realize that not only was he right, that it could be done with all three of them by coming up with a proper form of cryptographic verification model, but that it ran incredibly fast and incredibly cheaply without very much power. And again, I'm not going to bore everybody here with what all this means, but suffice it to say, Algorand is a pure proof of stake model versus a proof of work. And here's enough for you to know about that. It simply means that when you hear about mining and people Bitcoin mining or Ethereum mining, basically what happens is massive computers, when somebody puts a transaction up on the chain, they race to try and solve a cryptographic puzzle to prove that that is a valid transaction. In order to do that requires massive amounts of computing power in a proof of work. Basically, you've proved the work that's there. Well, that becomes...
And I just want to interject. It costs a lot of electricity and wastes a lot of electricity. Yeah,
that's where I was going. It's
Okay.
Not only incredibly expensive to do so from a computing perspective, but the wattage that it uses is astronomical. The numbers are staggering if you were to look at it. And later I can send you something that one of our guys did that shows the difference between like Algorand and that. Algorand runs on something called proof of stake. So the validation occurs not because there's these people trying to rush and mine it. It occurs because anyone who owns even one algo theoretically has the right to be a validator, if they are so chosen. And that choosing of a validator is a completely randomized functionality that's done through an algorithmic, cryptographically proven formula that Silvio and team created. That's the secret sauce, if you will. Once those validators are chosen, then the folks who get to actually be the voters is chosen completely randomly as well. Now, this sounds like a lot of steps. This all happens in milliseconds, incredibly quickly. And once it's done and it's final. So while speed may not be important in the world of real estate from the way we're thinking about it right now, do know that to give you some comparative to things you've probably heard of, like Ethereum, Algorand can process roughly 1,200 transactions per second versus sort of 7 to 10 transactions per second. It can propagate a block in under 4.5 seconds versus 15 to 60 minutes to prove out finality. When a block is propagated on Algorand, it is final. It has been proven to never fork. Now, what does that mean to never fork? Well, to never fork means that you can't have a chain going off in a separate direction. And why is that important? Well, remember I talked about these miners trying to rush. It's possible that you could rush, try and solve the puzzle, and more than one person solves it at the same time. Well, for a while, those blocks can keep getting propagated together until someone realizes chain A is the one that is really moving on, and chain B is just going to die out and be a dead fork. Well, that's a problem because all the transactions that have happened on chain B are lost transactions forever. That can never occur on Algorand. It's been actually third-party verified and proven that that's an impossibility to occur because of the way the technology was written. The other really important thing to understand about Algorand, and again, this is a bit on the technical side, but it's important when you start thinking about how you may use blockchain in general, is that there's something called layer 1 functionality versus layer 2 functionality. So when you think about things like Ethereum and their smart contracts, everything that's done there is done at layer 2. Basically, it's essentially like saying it's done off chain and then brought back on chain. Where at Algorand, we had the luxury of being able to look for 6 years of seeing what were the good parts and what were the bad parts of the blockchains that have been built. Silvio and team were able to look at it and say, okay, we're going to build as much functionality as humanly possible into layer 1. So creating tokens on Algorand are done at layer 1. Creating smart contracts in Algorand are done at layer 1. Creating atomic swaps at Algorand are done at layer 1. Why is that important to you and why is that important to real estate? It's important because it takes, I don't want to say zero because that would be unfair. It takes limited knowledge on how to be a coder. Like you don't need to understand how to code in order to create a token. I could literally show you right now how to create a token on Algorand. It would take under 10 seconds. You can go to algodesk.io and you could do it. And within creating that token, so think about creating a security token for your property that you wanted to offer to the world in some fashion, you could do that in literally 10 seconds. And all the different functionality that you might want to build into that, like who is an allowed participant versus a disallowed participant. By the way, those are the former whitelist, blacklist terms that we don't use any longer. Having the ability to claw back a transaction if there's a problem, having the ability to freeze an account. Those are all things that are occurring on Algorand at layer 1, which increases the not only the speed, but increases the functionality when you start trying to look at how to do the types of transactions that ultimately you're trying to do. And it puts the control squarely in the hands of whoever has those rights. And you can control being the owner of those rights. So those are all very important functionalities from that perspective. Then there's a whole bunch of other, super technical stuff.
I just want to stop because what you just said is somebody could do their own crowd sale. So if they, let's say they had a single family rental house,
Yes.
they could do their own crowd sale on Algorand directly and issue it. And then as long as it was, SEC compliant and all the rest of it, they could just issue directly without a tokenization platform.
That's accurate. Technically, you could do that. That's right. Yeah. Because you and I can agree to accept the Michael token. And if I say that's fine, you create the Michael token, I can put it in my wallet and say, okay, I'll accept Michael tokens. And we agree that, a Michael token represents the house at, 25 Wisteria Lane, then that's now my token. Now there's documentation around that and all that would be attached to it and so forth, but that would authenticate it from that perspective, which is really the key of what you're talking about there. So I promised a couple of other hard asset examples. And so I want to make sure I give at least one. So there's a pretty large market for home equity, what I call home equity agreements or home equity shares, if you will. And let's face it, your home is some people call it your biggest liability. Some people call it your biggest asset. Depends if you read Rich Dad, Poor Dad or not. And but regardless of which way you want to think about it, there's usually a lot of equity value built up in your house, which is very difficult to take advantage of without going through a lot of hoops with a lot of proving of records and whom you are and barriers to entry at best. Well, there's a pretty growing industry of folks who are now tokenizing their equity in their homes, and they're doing it because others are bringing it to them and making it easy for them to do that. And that's all happening through blockchain technology. And in very short order, you will see a lot of this occurring. In fact, we just announced a deal that's being built out on Algorand by Vesta Equity. You can look it up. It's exactly that case. There's two others that will be announced in short order. Some of the biggest Wall Street banks are involved in this as well now. And so it's more than just a little bit of an industry. And so you can see how you need to be on top of understanding these things, because once people can transact amongst themselves or in a different type of more transparent market and create value for their ownership, whether it's a commercial building or a residential building, those who are involved in real estate need to think about where that value play comes into their own ROIs and so forth. The other thing to note, and we won't go too deep into this because I know we're short on time, is that there's a whole thing called DeFi, which is decentralized finance. And I want to touch on that quickly, which basically means there's no bank middleman. You know, at least that's how it's thought of. In reality, it's open finance, which is what Michael just said about, that he and I can do business together, right? And don't think that the banks are going away anytime soon. They're going to be around for a long time. I often say that, you know, as Mark Twain said, reports of my death are greatly exaggerated. The reports of the banks not being around anymore because of blockchain are greatly exaggerated. They're going to be around for a while. But DeFi has also opened up the doors for how to do a lot of interesting borrowing and lending in more efficient ways. And so if you create and you tokenize your assets, in this case, real estate assets, a whole world is creating in the DeFi space now that will look at those assets and they will borrow and lend against those assets themselves, which creates even more increased liquidity in the overall real estate space. And now you start looking at some really interesting capabilities, especially as a trading market develops for those real estate assets, and you start seeing them being used as different forms of either collateral or commerce or currency against other forms of financial assets. And you're literally trading a token on the Michael home on 25 Wisteria Lane versus it could be a token of royalty rights in Italy. And so things that you could never possibly have thought of before are now possible because of the ease of moving in different financial circles. So I promised I would stop by 7:40. It's 7:40 now, and make sure we had at least 5 minutes for Q&A. So I'll stop spewing.
No worries. Thank you, Barry. And I know we've got probably an onslaught of questions coming up here for you. So I do want to encourage anyone who does have questions for Barry to just go ahead and turn your camera on, mute your mic. We're working with about 10 minutes here remaining. So
and I'm not sure if anybody got the Desperate Housewives reference, Barry, but
the Wisteria. Yeah.
I was about to use my own address. I thought that's probably a bad idea.
Well, yeah, you know, I saw we had Ryan, Daniela, Richard. I think even Vinky was getting ready to ask a question. So I want to have you guys come up here. There we go, Ryan.
By the way, just before we go, one thing I should say, there's also need to understand that there's a lot of different contact points. You know, it's not just Michael and I do things together. There are custodians, there are transfer agents, there are exchanges. There's lots of different elements and operators within the stack, the financial stack that operate and help along the blockchain. So, and there's a whole ecosystem, like within Algorand, there's a massive ecosystem that's been built of all those people I just mentioned, as well as developers and integrators and so forth, who all stand ready to be able to work with you and allow for the type of financial transactions that you want to tokenize or take advantage of to aid you in making that possible, from, as I said, custodial work to exchanges and the like. Go ahead. I'm sorry. I apologize, Adam.
All good. No, all good. So yeah, Ryan, go ahead.
Thank you. Yeah, I'm very interested as an entrepreneur to be able to tokenize real assets, but I do not have like the coding skills, etc. I kind of gravitated toward what you said about being able to quickly create a token through Algorand. One of the questions is like just like the creating of more complex token economics or token monetary policy, are you able to do that on Algorand without having that technical background, or would you need assistance? Yeah, that's my question.
Yeah, so tokenomics, you can effectively set your own tokenomics in the way you're thinking about that, but don't get too caught up. There's a difference between saying, okay, I have an asset, I have the Ryan asset, and I'm going to tokenize it and then want to be able to sell it. And then also saying, I'm going to create this token, and that token's going to have maybe rewards attached to it and all. You can build all that in, and that would be the type of things that start to get into what is it being used for? How do those rewards get attached to it? And so that's a level of complexity that you're adding to the base token, if you will. Some of it, depending on what you're doing, can be done actually quite simply as well. Some of it you can get very complicated, of course, and as you get into governance rights and so forth. In fact, there's many a token that's created that there's nothing there other than it being a governance token, which says, hey, if you own this token, you have the right to vote. And that's an important right in many things. And so that in and of itself is its own type of asset. A little bit different than a real estate asset, of course, but when we're done. So Ryan, at the end of the, when we're done, before we go, I'm going to put up a slide and show you some places that you can go and bore the hell out of yourself or make yourself really excited or find something to do this weekend if it's raining where you are and get really into it. But it's actually, there's tons of tutorials and easy to read stuff on that.
And Ryan,
Yeah,
and Ryan, I would also interject and say, it doesn't have to be that complicated. You don't have to get into tokenomics. It can just be, is it a real estate deal and does it make sense? And if you need to have a PPM and all the legal documents, does it have that? But at the end of the day, if it's a real estate deal, let's say, again, I'll go back to a net lease property or a single family home. If it's got $100,000, $200,000 a year in rent, what it's going to say. And you say, my investors are going to get X amount of dollars. It can be that easy. You don't have to go crazy with all the tokenomics part of it, unless you really want to. So, but my limited understanding and having gone to a public school and don't do math, I always try to keep things simpler.
Thank you.
I love Michael. Michael always drops the public school math one in there. I love it. That's probably top 3 jokes right there. Okay, so I know we had Daniela, we had Richard, maybe even one more. So let's go in that order. Daniela, go ahead.
Hi.
Hi,
So
Daniela.
first of all, big tip of the hat to Michael and Adam for getting Liberty Real Estate off the ground. Very excited for you guys. And thank you for that talk, Barry. That was a really great eye-opener. So I have 2 questions. The first one has to do with speed of Algorand compared to Polkadot. And the other one also has to do with Polkadot. Does Algorand permit different blockchains to communicate similar to the Polkadot relay?
Yeah.
Chain?
Yeah. By the way, both good questions. And I purposely try not to talk about other chains ever in the negative. I only try and explain what we do. But interesting enough, I will say that I don't see a lot of Polkadot when I'm talking to different people across different types of industries and all. But it is a protocol that I am comfortable saying I think has the right muscle, if you will. What it has is one thing that's very important, which is this concept of instead of everyone driving down the same lane with all the cars stacked up, theoretically, it's like being on a highway where everyone's can travel on different highways and then can merge together. It's a little bit untested, candidly, in terms of how well it works, because it hasn't been used for very much to date. But my understanding, and again, I can't do you the right justice on this, is that it's real in terms of what its capabilities are. I have nothing but good things to say about it. In fact, I literally told my daughter yesterday, she's now a crypto person in her own mind. I said, look, if you're going to buy something other than Algorand, buy a little bit of Polkadot, because I hear other people think it's pretty good. But in answer to what does Algorand have that's comparable, the answer is yes. So Algorand and Silvio and team in particular have spent a lot of time and working on what we refer to as interoperability, which allows our chain to talk to other chains and allows other chains to operate. You could do that now. The problem is, if you try to do it now, you're doing it in a very clunky manner. It's something called hash time locking, which again, I just used the term on the first tee that sounds really good, but I could probably do justice if I tried to, but I'm not going to explain it. that you can do it with that, but it's clunky, and we're not going to release it to the world as a clunky thing. We have another way of doing it and bridging it, what we call token bridging, that will make it very seamless. And so while it's not there and ready for prime time, it's in the works, I'll say. And the way that Polkadot does it, as I understand, is through a technique called sharding, which again, I'm not an expert at, which is different than the way Algorand will approach it. And we purposely have a different approach to it because Silvio and our developers feel that it's a much faster and secure means of doing it. So the answer is, we do have ways. We don't hold ourselves out as being that, and that is what Polkadot holds itself as being. I just don't know or have seen it really in action very much at this point.
And
Thank
I
you
just
very
want
much.
to, stress the fact that Silvio is, I would call him the godfather of cryptography. So
Yeah, well, that's accurate, or the father of anyway.
yeah. So with, because it was his zero proofs that, actually made Bitcoin and some of the earlier tries at cryptocurrency possible.
I think there was another question from a Richard.
Yeah, Richard, he's been in your seat before. Good to see you again, Richard.
Hi, Adam. Hi, Michael.
I know that voice and that
see you
face.
again, Barry. How are you?
How are you? How are things there at the Big T?
Yeah, we're going very well. As Adam said, I was on this show a couple of weeks ago, talking about Texture Capital and what we're up to, and it's good to see you. Good to hear that it sounds like you and Liberty Fund are working together. But I want to kind of confirm that. Is Liberty Fund going to be tokenizing on Algorand? Michael's muted.
Yeah, that's the way we do it. We can't talk publicly about that.
We're still trying to work that out, and that also has something to do with our tokenization platform as well. So we're still trying to figure out where we're going to be. I will say that we like Algorand, and we'd love to be ambassadors to Algorand and introduce them to the real estate world. So that's we like their product, but we're still trying to evaluate what, because at the end of the day, we're real estate guys and not technology guys.
Yeah, for those of you who weren't on whatever Richard's talk was, and I apologize, I was not. He represents exactly what I talked about, that there's more than just two people sitting across a computer screen somewhere and transacting, even though that's theoretically possible in the world of blockchain. There is a world where it very much, and there's third-party entities that are not creating centralization. They're just creating enhancements to allow commerce to occur. And that's what Richard and his team are building out quite successfully.
Yeah. I think it might have been on the last call we had, Michael, where last event we had, where you mentioned that I think the cost on Ethereum of tokenizing your 2,000 shareholders was something like $1 million roughly. And obviously, as we talked about, the gas fee or the fees on Algorand are going to be significantly cheaper, not just initially but ongoing. So
that's really, you bring up a good point, and that's when I thought, well, everybody just does it on Ethereum. It was one of those assumptions back in 2019. And then, when the gas fees went up, it's like, well, this is nuts. I mean, if, it's actually going to be negative when we do a monthly distribution to our investors. It's like, we actually need to investigate to bring in a better investor experience to our investors. So that's why, we put together probably about 25 metrics in terms of lining up the different blockchains and what would be the best thing to launch a financial asset on, especially a real estate asset. And like I said, the highest among them is, are our investors going to have ongoing fees with trading, with receiving distributions, with any type of transaction? And so that's a concern with Ethereum. And we believe that, Algorand has solved that. One of the concerns that I have as, just somebody that doesn't normally do blockchain is like, Well, there's no contract with the blockchain, so you don't have control over what the blockchain does in the future. I guess you can migrate off the blockchain, but then you inconvenience. So what we're trying to do is make the best decision possible for the issuance blockchain.
I suppose I should address the actual cost parameter there. Thank you for bringing it up, Richard, because I didn't. And just to give you by comparison, the gas fees on Ethereum are, on the tight end, maybe $15 a transaction, and on the wider end right now, north of $100 a transaction. And unfortunately, they only get worse the more traffic that is on the actual chain. So it's kind of a self-fulfilling prophecy to not to help you. And again, I'm not here to talk bad about Ethereum, but contrast that with Algorand, where every transaction, regardless of size, is 0.001 algos. And an algo is roughly $1.30, so that's $0.0013. So here's some real numbers to kind of stick in your head and go to sleep and go like, holy moly. 3 weeks ago, the Italian music rights organization, CI, launched 4.2 million NFTs or tokens on Algorand, and it was all done in the course of about 5 hours, which would have taken forever on Ethereum to begin with. But regardless of that, those 4.2 million tokens on Ethereum would have cost somewhere in the neighborhood of between $200 and $400 million, just the initial transaction. On Algorand, it costs under $5,000. I mean, that's not, I'm not making up those numbers. Those aren't, Baloney, Esquire, National Enquirer type of things. But that's real. That's real hard and fact numbers. So when Richard's talking about that, he's not wrong, and Michael is not either. And so again, in real estate, maybe not quite as obvious, but I'm telling you folks, at some point, this idea of fractionalizing interest in properties is going to go to a lower and lower fractional amount, depending on what regulators allow for. And as secondary trading comes into that, you will start seeing a lot of flow. Well, you're going to have a lot of flows, and you're going to have people who are maybe selling $10 and $20 and $100. Well, it doesn't work if each transaction costs you more than the amount of capital that you're moving around. It's not practical.
Right. And like I said, the transactions are also, like distributions, any type of interest payments, any of that stuff. So if, that's, resistance if you've got those fees. So that's something that we had to, look into long and hard. And like I said, there's a host of other things. It's like, well, do we think this blockchain is going to be around for a while? Do we think that they have the right team behind them? Do, we think they're going in the right direction? And, all this stuff, like I said, I love the fact that you can talk about transaction speed and you can talk about block finality, which means that, your transaction is completely cemented and it's there in the distributed ledger. But at the end of the day, the main thing for us is how much friction is there in the transactions.
Michael, I recognize we're kind of running over here, so I don't want to take up much of anybody's more time, but I do want to just leave one thought, and then obviously you guys will close it out, is that one thing to know about Algorand, and I mentioned in the beginning, is that we're a technology company. Take the word technology out of there for a moment and just focus on that we're a company. And so, Daniela, well, I don't know much about Polkadot. I can tell you that there is no Ethereum company, as an example. And as a company, there's roughly 80 Algonauts, if you will. Most of them are computer scientists or engineers and all, but there's a full capital markets team and a marketing team and a business development team and the like, and a C-suite and all. But more importantly, there's a real group of people that answer the phones on the other end. And so while we have all sorts of different social media channels and ways to be in contact with us through different sites, if you will, there's also ways to be in direct contact. And so when somebody's developing on Algorand, which is really important, you're not left out there to just read a white paper and then figure it out on your own, or read a white paper and then go hire somebody to do it for you. You're welcome to do that, of course, but if you try to do anything on your own, back to the question that I think it was Ryan asked earlier, is there's people who will help you. You put a message on our developer Discord, someone will be back to you very quickly to help you with that. We don't develop ourselves. We're not building the apps ourselves, but we're there to make sure that anyone who is building an app is getting all the support that they can. And that's a big deal. that's a big deal for folks who are new to the space. So that's my last thing I'll say there. And then I'm just going to put up on the screen, Adam, this real quickly so that, as I mentioned, so that people know how to get in touch with folks at Algorand. I'll just do that. I'll share my screen real quick.
And 24575 asked, are there any actual applications that are live now? And I think, Barry, you were talking about the Vesta Equity people that, they're creating, tokenizing equity in people's
homes.
houses.
That's right. And so whoever asked that question, if you look here, I hope this is coming up where I wrote contact and useful information. So 3 main sites I want to point you to. One is the home site, which is algorand.com. And you'll see under there something called use cases. So please go on there. You can actually sort by, I don't think you can put real estate, but I think you can put financial transactions. And on there, you'll find things like Realio and Asset Block and Vesta Equity. It's just some examples that you can look at, which will all speak to real estate driven type of transactions or things that are touching them. There's a whole bunch more that unfortunately, some that I can't speak to yet because they're not publicly announced, but suffice it to say there are more. And there's other things on that in the actual use cases that touch on those things. Then the second one is the Algorand Foundation. And note that Algorand, the Inc. that I'm a part of, we are the technology side of the company. We don't handle the algo or any of the tokenomics associated with that. That's all handled at the foundation. And so for people who are developing or building things, it's at the foundation where you can get grants, where you can get accelerator awards. They're the people who actually handle all the governance around the algo, the actual crypto of Algorand. So important to know that, especially if you're thinking about, hey, how could I get some money to start a project that I want to do as well? And by the way, there's other ways through ourselves. We might invest in your company, or we have VCs that work with us, including Borderless Capital, which is a specific VC fund that invests in Algorand building projects and all. So I can always help somebody out with that if need be. Then the final one, which is really important for folks like Ryan and so forth, is the Algorand developer website, the developer portal. Please go on there, just tool around, read through. There's all sorts of neat and super videos, cartoons that make it easy on people. It's tried to be as user-friendly as possible. Love any feedback, by the way, if you're struggling with it. There's forums that you can go on and ask tons of questions. It's a very open community. And of course, there's tons of places on social media, through Twitter and through Reddit and so forth, where you can run yourself down the rabbit hole and hear everybody who loves us and who hates us all at the same time. If you need to get in touch with me, very simply, I'm Barry at algorand.com. Please feel free to call me at anytime via email. I'll be happy to either answer your questions or point you in the right direction and let me just say thanks, guys, for including me in this talk. It was really nice to be able to present.
Well, we really appreciate you showing up. We appreciate the time that you've given us. It's eye-opening that it helps a lot of people here, especially me, because this is part of our journey to figure out, how to actually do this. And it's a new thing, but again, I think it's going to be, the financial system of the future.
Well, again, thank you for having me.
All right. With that, thank you all for showing up. We really appreciate it. We appreciate the great comments. And, we will have a replay of this. So if you missed anything or if you didn't get the entire thing, it will be up for replay on our YouTube channel and also the libertyfund.io YouTube channel as well.
Thank you for listening to the Blockchain Real Estate Podcast, hosted by the Blockchain Real Estate Summit. Don't forget to sign up for the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestate.com/registration. If you enjoyed today's episode, please make sure to follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback really helps increase the visibility of our show, allowing us to reach more listeners like you. If you have someone in mind you would like us to interview, You can go to blockchainrealestatesummit.com and leave a comment.
Hi, this is Adam Carswell, the voice of Liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.